Larry Lavrentis for Ichimoku.co and ForexTrading.tv with a daily analysis for wheat futures for the trading day ending Thursday, February 27th. Well, a change of trend to the downside today. A candle that's made a lower high and a lower low. Previous day's trading we had a fairly large black body candle that was an inside day, and prior to that an uptrend in place. We saw the market testing to the 617.75 level for the day prior to trading days prior to today's trading, and for the trading from yesterday. And yesterday we saw the market rejected from that level in a very substantial manner. A trading day where the sellers have closed with very strong control and been very strongly committed to taking this market lower, and it really does suggest the enhanced resistance around that 617.75 level, which coincides with the top of the Ichimoku cloud. Very strong resistance around that area, and today we've seen solid follow through from the sellers once again, taking out the important 600 round number, and there was a chance of that area acting as support, being a round number, previous resistance, but today the sellers have just blown that away in a very bearish manner. The downside momentum from the sellers has actually even increased slightly, with the size of this black body increasing on the previous. Now, just looking here, there is a little hint that we are seeing, or we did see the sellers lose some commitment down around the 590 area, previous resistance area, and now acting as support, and prior to that it was a previous support area as well. So the market failed to close down below there, even though we did probe down below there, but the amount of loss of commitment is really insignificant. It's such a small shadow that it's not terribly significant. If this trend does continue down, we do need to watch the bottom of the cloud, and it will move over a little bit and be just below the 590 level, so potential support coming in there. We also have the Kijun-sen trading at 585.5, so we could see some significant support coming in there. But if we do see bearish activity down below these indicators, including the Kijun-sen, we could quickly see this market trading down to 575. So that would be a continuation of the bearishness if we do see that, and the sellers certainly have built some solid downside momentum here. So crucial area here is between this 590 area and this 585 level where the Kijun-sen is trading at. Now, in terms of the Fibonacci extension, and here we see the market interacting with the 161.8% level and being rejected from there, coinciding with that important area of support, and it does suggest that the support there is quite strong, and we should be watching there for the buyers to come in. There really isn't any indication that the market is going to hold up there. The sellers have very strong control of this market. The only thing to watch out for is, have the sellers done too much work too soon, and will they need to take a bit of a rest, as we very often see when we see these extreme type days as we've seen for the previous two trading days. Now, the other thing to look at here is that we have technically had a change of trend in the second time frame. Whereas we were previously trending up here from the peak, trough, higher peak, higher trough as we took out here, we've now formed a series of lower peaks and lower troughs, and here we have a peak, a trough, a slightly lower peak, and now a lower trough as we took out this 600 level. So a change of trend in that second time frame, in line with the first time frame change of trend as well. In terms of Ichimoku, slight breakout and a close just below the Ichimoku cloud, giving us a bearish market and a bearish signal in terms of Ichimoku. What we want to see, however, is some decent bearish follow through for that to be a convincing signal. So I'd like to see the market trading down through this Kijun-sen support at around 585. In the medium term time frame, the market is still bullish just by trading above the Kijun-sen, the pink line, and that Kijun-sen has been pointing flat for some time, and here this illustrates how well the indications are with a flat Kijun-sen when price action is attracted back towards it, and that's what's happened there. We are now trading down below the Tenkan-sen, and it's been some time since we have been, and it's now failed to act as support, and we have a change of sentiment in that fast-term time frame from positive to negative, and this suggests that we could see some follow through to the downside and a bearish market in that longer-term time frame. Looking over at the Chica span, that is above the corresponding price action, so it's confirming what we're seeing in the medium-term time frame, but not in the short and longer-term time frame. So we're getting some conflicting signals here, so we do have to be wary of taking some of these signals. And as I've mentioned, I'd like to see some follow through down below that Kijun-sen for a valid bearish breakout below the cloud. But really that 590 down to 585 area is going to be crucial to the market for tomorrow's trading. If we do see the market bounce off this area and rally, then 600 may hold as resistance now.